Now we will take a moment to introduce you to our speaker. Our speaker today is Dan Merritt. Dan is a senior manager on Rehmann's Public Sector Assurance and Financial Reporting team. He is a member of several professional associations, including the American Institute of Certified Public Accountants, the Michigan Association of Certified Public Accountants, the West Michigan chapter of the Association of Government Accountants, the Michigan Government Finance Officers Association, and the National Government Finance Officers Association. Dan is a CPA and a certified government financial manager with over 10 years of experience in the governmental arena as an auditor, consultant, and contracted finance director. Dan, you may begin the presentation.
Thanks very much, Ashley, and I appreciate that wonderful introduction. Couldn't have done it better myself. Today we're going to be talking about single audits, and we're going to spend maybe the first half of our presentation talking about the overview of a single audit. What is a single audit? What are the stages of a single audit? What are the components of uniform guidance, which is the federal registrar governing single audits? And then we're going to talk about the compliance supplement, which is what provides us as your auditors with detailed information about exactly how to execute uniform guidance with respect to the specific federal programs that we are auditing. In the second half, we're going to talk about subrecipient monitoring. If you were with us last year, I talked about subrecipient monitoring last year as well. But I think this is going to be a continued area of emphasis, at least for this next year, as we come to the COVID funding cliff. We're also going to talk about the recently released 2024 compliance supplement and what changes are involved in the compliance supplement for this year. And finally, we're going to talk about the proposed updates to uniform guidance that are now going to be implemented here in October. So hopefully there's something in this presentation for everyone, whether you're an experienced single audit auditee or auditor, or you're new to the single audit and governmental grant compliance world. Hopefully there will be something at the table for everyone to take something away from today. Now, diving right into the single audit overview, let's talk about history for a minute. Pre-1984, every federal agency had its own requirements for grant audits. And this was, I think, difficult for many auditees because it meant that you could be audited more than once in a single year by several different federal agencies. You could have an audit over your Department of Education grants. You could have a separate audit over your Department of Treasury grants. So you could get audited 5 or 6 times. Imagine maybe you're a county or a larger city that has a number of different federal programs. This could be a lot of compliance. The Single Audit Act of 1984 created one single audit of all federal awards. So that has sort of simplified what it is that we do now with single audits, and it gave us the guidance that we referred to at the time as OMB Circular A133. So even today, sometimes if you're looking at legacy single audit guidance or documentation, you'll see people refer to single audits as the A133 audit. In fact, when I started my career, that's what single audits were called. They were called the A133 audits, and changed to uniform guidance only shortly after that. Now, uniform guidance is also referred to as 2 CFR 200. So if you're new to the single audit world, we'll use those two terms interchangeably. It created a new threshold for single audits, 750,000, which is going to be changing soon. We'll talk about that later in the presentation. At the time, that was a fairly significant increase. It went from 500,000 to 750,000 back in 2015. And up until this year, the last significant update to uniform grant guidance was in 2020. But as we'll talk about again at the end of this presentation, we have a fairly significant audit update to the rules for 2024. So what are the components of a single audit? Well, one of the things that you'll find with every single audit is that it has to be conducted in conjunction with a financial statement audit. and it has to be conducted in accordance with government auditing standards. This is often called the Yellow Book. If you actually were to buy a hard copy of government auditing standards, it would come in physical hard copy form, and the book is, of course, yellow because we like to keep things clear in governmental accounting. Whenever you have a single audit, you're going to have a financial statement audit, and it's going to be conducted in accordance with Yellow Book in conjunction. And we'll talk about why that is in a little bit. Your financial statement audit should result in an opinion on whether the financial statements are fairly presented in accordance with GAAP. This should be no surprise, whether it's Yellow Book or non-Yellow Book. Your normal financial statement audit should always result in this opinion, hopefully an unmodified opinion. Governmental auditing standards sort of build on the foundation of generally accepted accounting standards and generally accepted auditing standards, and GAAP. And adds in some additional requirements for auditor independence and CPE. Rehmann has historically offered some specific trainings about Yellow Book and what are the actual specific requirements of Yellow Book. But the two most important factors that I always sort of bring up are that your auditor has specific additional requirements for how they're independent if they're performing a Yellow Book audit, and they have to get specific CPE, continuing professional education, to do those types of audits. It's also going to result in what we call sometimes colloquially our Yellow Book opinion or our Yellow Book report. Now, we try to specify that the Yellow Book report is not an opinion on internal control. For an opinion on internal control, we would have to test internal controls. And more on that later. I'm going to kind of detail through, as we talk about the overview of a single audit, the three different reports that you'll see throughout the single audit process. But of course, the first one here is your Yellow Book report. You're also going to get a compliance audit of your federal awards. It means your auditor is going to test major programs. We'll describe how an auditor selects major programs. And you're going to end up with these three reports here that I show at the bottom. An opinion on the CIFA in relation to the financial statements. So that's why we have to have that financial statement opinion, is we need to have an in relation to opinion on the CIFA, saying it's correctly presented with respect to your other financial information. An opinion on major program compliance, which means we're going to have to test internal controls related to the single audit specifically, and a report, not an opinion, on your financial statement to internal controls compliance that might have come to our attention during the audit. So I think this brings us to polling question number 1. I'll give everybody a minute or so to answer this one. So what are the stages of a single audit? Well, there are 4 sort of major discrete stages, the first of which being, do you actually need a single audit? And as of right now, so if you're doing a 6/30/2024 single audit, the rules are still the existing uniform guidance rules. We'll talk about when the new rules will be effective later on. But the very basis of most single audits is obtaining that CIFA, Schedule of Expenditures of Federal Awards, preparing that list of grants, and determining whether or not an organization expended more than $750,000 in grants during the year under audit. And again, your auditor is required to test that CIFA in accordance with SAS 119, sufficient to issue that in relation to opinion, right? So we need a schedule. We need to be sure that that schedule is correct. And then if you have more than $750,000 in expenditures of federal awards in a particular fiscal year, then you're going to need a single audit. Those after you've determined the need for a single audit, the auditor now has to do what's called major program selection. So which particular larger, hopefully, programs on an organization's CPA do we have to test? Well, first, how do we even determine what each individual program is? We look at it by assistance listing number. This used to be called CFDA, Catalog of Federal Domestic Assistance. And then we group those by CFDA assistance listing number or by the cluster. So some assistance listing numbers are grouped together. For instance, the child nutrition cluster, the community development block grants cluster. There are maybe a couple of assistance listing numbers that all have similar or effectively the same compliance requirements. They get grouped together for the purpose of major program testing. Your auditors then divide those programs into Type A and Type B programs. Cutoff is it starts at $750,000, and if you have a huge schedule of expenditure of federal awards schedule, then you potentially could have this Type A be larger. So if you get up to like 25, 30, 35 million, it becomes, there's a sliding scale where it becomes 3% or 5% of total expenditures for Type A programs. But for most organizations at the local government level, that cutoff starts at $750,000. So once we split Type A's and Type B's, we then have to assess risk on Type A programs. We have to look at, and fortunately for Type A programs, the determination is fairly rules-based. Are those Type A's low risk? Are they not low risk? Have they been recently audited? Were there recent issues with those programs? And if a program is not low risk, i.e. high risk, we as the auditors are almost certainly going to test that program. Now, there are also situations in which we might test either low-risk A's or some portion of Type B programs. And that depends on the risk assessment of Type B programs, and it also depends on how large an organization's CPA is and how much coverage we have. Remember, we said there's low risk and high risk A's and B's. There are low risk and high risk auditees as well. Uniform guidance gives us rules and what makes your organization either low or high risk. Again, they're similar to the program specific assessment requirements. It sort of runs through the, have you had recent issues? Have you submitted single audits for the last 2 years? Is all your reporting been on time? Did you submit your required data collection? If the answer to all of those is yes, you could be low risk and we have to test a lower percentage of your CPA. If you are not low risk or if you're a high risk organization, you maybe have had material weakness, an issue in the last 2 years, we're going to test a larger percentage of your CPA. I think it's 40%. And testing a larger percentage might mean we have to pick up additional programs to get coverage on your CPA beyond just maybe those high-risk A's. So there's a whole process for major program selection. If you take nothing away from sort of this short rundown on major program determination, take away that if you have a high-risk Type A, not recently audited or recently audited with material weaknesses, we are going to end up testing that program. Again, that percentage of coverage is 40% if you're high risk. If you are low risk, it's only 20% and requires a clean single audit for the last 2 years and to be filed on time with the clearinghouse. In each major program, we have to determine as auditors which compliance areas we're going to test. And that's where the compliance supplement comes in. We're going to talk about that in some detail in a minute here. And we're also going to have to exercise some auditor judgment. The compliance supplement is a guide, and we usually follow that guide quite closely, but there could be situations in which we think something is direct and material based on our understanding of how you run that federal program that isn't called out as something that we're going to specifically audit in the compliance supplement. So just understand that you have to comply with all the requirements of 2 CFR 200, not just the ones that the compliance supplement has called out for us as auditors to test. The compliance areas run A through N. Again, we'll go through each of these individually, but it goes from activities allowed through special tests and provisions. So sometimes you might see some sections of the guidance say, well, it's attribute L, right? And so attribute L in the guidance is reporting, financial reporting, performance reporting, special reporting, those types of things. So this is just a quick key of different compliance areas that might be applicable. And finally, once we have determined a need for a single audit, we've selected major programs to test, we've got through the actual field work and testing of those programs. Again, we issue those 3 reports that in relation to opinion on the CIFA, the Yellow Book report, which talks about internal control over financial reporting and any issues with laws, regulations, or grant agreement compliance. And finally, the single audit report, which is an opinion on compliance for each major program and internal control over compliance. As part of the single audit report, we have the schedule of findings and questioned costs. Now, if you've ever been through an audit presentation with me, I'll often skip straight to this page in the back of your single audit report, because remember, a single audit has to be done in conjunction with the financial audit, and the single audit requires that all financial statement findings, material weaknesses, significant deficiencies, and federal awards findings be presented in the schedule of findings and question costs. And it gives you a 1-page summary of all of those auditor results. So often, this is a great place to go when looking at a set of issued financial statements to say, were there any reported deficiencies or weaknesses? Were there any maybe questioned costs? Were there any federal award findings? And it even gives us a roll forward of what was reported in the previous year as findings or issues in the audit, and were those things resolved and properly dealt with for the current year's audit. So this is a great place to go to sort of see a summary of how did the organization perform this year in both their financial and their single audits. And the very last step, and we'll talk briefly about some of the changes to this year, is to submit the data collection form and reporting package. It's submitted online. Your auditor may help you put this together. If you work with Rehmann, we do help you to compile this information. It's basically just a compilation in a specific format of all of the results of your single audit. Your CIFA, your federal awards, and also asks you to report on your financial statement audit, and then it provides those financial statements for public inspection. If you are having a single audit and you are submitting your information to the clearinghouse, it means all of your financial statement information as well as your single audit results are going to be available for the public to look at. So one of the things we value highly in governmental financial accounting and reporting is transparency. So we want to be sure that anything that appears in your financial statements, and you should be aware that anything that appears in your financial statements or in your single audit is going to be available for public inspection out on the clearinghouse website once that is submitted. So let's switch gears here now for a minute, and we're going to dive into uniform guidance. So talking about what the basic rules are for managing grants. Remember that as we go through this, if you are a recipient of grants or federal awards, you're responsible for complying with all of uniform guidance, not just maybe the federal compliance requirements the auditor has to test. We'll talk in a minute about how they kind of skinny that down for us when we're looking at specific major federal programs. But as an auditee, you're always responsible for complying with all of uniform guidance on all grants. Remember that this used to be called A133. It was also called A102 and A21. Uniform guidance consolidated the administrative requirements, federal cost principles, and single audit guidance from the original OMB regulations into one Federal Register location. So now in uniform guidance, we have parts A through F, and we're going to focus today in our discussion on parts D, E, and F, because A through C are mostly general provisions, acronyms, just sort of describing what they're going to talk about later on, and D, E, and F are usually the portions that we focus on because they actually talk about actual compliance and requirements for organizations receiving federal awards. We're also going to discuss the 2 most important appendices to uniform guidance, the data collection form and the compliance supplement. We'll focus mostly on the compliance supplement. Now, subpart D is the standards for financial management. in the standards for financial management, we see some of the very basic requirements that maybe we, as people who manage grants, don't even think about on a day-to-day basis because we do a lot of this stuff already. But it's important to have these in the guidance because if you were building a system from the ground up, you would need to know what are the basic requirements. Or if you're just receiving federal awards for the first time, what do I have to do to make sure that I am complying with the basic requirements of grant management? You need to separately identify in your ledger federal awards. Most organizations do this by having individual cost centers for each grant. You need to be able to produce complete and accurate financial results. Again, a lot of that is done through having transparent ledger accounting, having clear cost centers that define each federal award and where the costs and revenue for that federal award exist. You need to have support for federal draws. If you are submitting for disbursement from the federal agency saying, hey, pay us $500,000, you need to be able to show, especially if it's a reimbursement-based grant, that you incurred $500,000 of cost, usually by providing appropriate GL detail. And then upon request, you'd have to be able to provide specific invoices showing that you had allowable costs for those recorded expenditures. You also need to have an effective system of control and accountability. We'll talk about the standards for internal control down the line here. And finally, perhaps most importantly, if you're new to receiving federal awards, you need to have written procedures about how you're going to manage your federal grants. In fact, there are 5 specific areas that the federal government requires you to have written procedures on. And those are payments, procurement, allowability of costs, compensation, and how you're going to deal with travel costs. These are each important in their own way. Payments means you have to have a written process for how are you going to do those draws from the federal government, especially if you have a reimbursement-based grant. How are you going to manage that process and make sure that you are appropriately submitting draw requests? Procurement meaning when you go out to find contractors or subrecipients, how are you going to make sure that you follow the 2 CFR 200 standards on procurement? And it's supposed to include rules on conflict of interest. Allowability of costs, how are you as an organization going to make sure that you only spend federal money on actual allowable costs? Compensation, how are you going to be sure that you are charging appropriate personnel and benefits to this grant, that you aren't overcharging the grant, or that you aren't somehow charging the grant for the cost of payroll that wasn't for time worked on the grant? And travel costs. This is especially important when it comes to charging reasonable costs. I've seen recently worked with some organizations that have had trouble with maybe not having a clear enough policy on allowable travel costs and then overcharging the grant for things that really weren't reasonable or appropriate to go on a federal grant. So these are the sort of 5 required and important areas to have written procedures on for federal grants. Shifting over to thinking about internal controls, how do we as managers of federal grants or those looking at the management structure for federal grants implement and evaluate an effective internal control structure? Well, there are sort of 2 things that the OMB asks us to look at. It's COSO and it's the Green Book, right? COSO being the standards on internal control that are followed by most organizations that follow GAP. It gives us 3 objectives, 5 components, 17 principles. Interestingly enough, the Green Book, which is the Office of the Comptroller's manual on how to do internal controls for governmental organizations, tells us almost exactly the same thing, right? If we flip back and forth between these, well, the cube is just about the same, just maybe with a little bit more detail. So we're going to walk through these sort of major components of internal control that are specified in the Green Book and say, how do we evaluate and manage our internal control environment, especially if we're trying to have a single audit that follows Yellow Book and Green Book requirements. So first off, the control environment. In each section of internal controls has sort of established principles within it. The control environment is maybe one thing that when we think about internal controls, we don't spend enough time considering, because this is the sort of top of the organization, how do we provide guidance to the rest of the organization in carrying out internal controls? Usually when we think about internal controls, we think about specific control activities. Maybe that's is the bank rec being properly approved and completed in a timely fashion. Those are control activities, right? But if you think about sort of the environment that surrounds that, why would I bother to do the bank reconciliation timely if I'm not being provided any accountability? If I'm the accounting manager and my board doesn't show that they have a commitment to competence and that they enforce accountability on the directors of my organization, that they have a commitment to integrity and ethical values, I might not think it's as important to exercise each of those control activities. So each of us, as part of management structure, as the auditors coming in from the outside, or as members of a board for an organization, all have a responsibility to exercise oversight, to make sure that we are showing our organization that we care about the integrity and the exercise of ethical values, to help establish a structure that provides responsibility and accountability to those who are carrying out the specific internal control activities. The control environment, how effective your control environment is probably going to determine how effective the rest of your layers of internal control are in your organization. The second layer of internal control is risk assessment. This is something perhaps that we, as part of our sort of internal control cycle, don't focus on as much as we maybe should. But this is thinking about how is it that we decide what's important for us to do in terms of control activities? A lot of times, because an internal control structure is already in place, we don't think about, well, how do we change that internal control structure, or how did we implement that internal control structure in the beginning? How do we make choices about what's important to do? And we do that through risk assessment. We say, what are the important objectives that we have to meet throughout the year, and what do we think is specifically risky? How do we identify and analyze and respond to those specific risks? How do we assess a risk of fraud, right? If we are working on the inside or as external auditors, we have some responsibility towards trying to be aware of and alert for potential fraud. And then how do we identify, analyze, and respond to changes? Which means that this risk assessment process should be happening regularly in the organization's life cycle, and I would say at least annually. We should be sitting down, looking at our internal control structure and what control activities we are exercising and saying, are these still things that are providing us with value, and are we addressing the appropriate risks? Then, of course, control activities, designing activities for the information system, implementing control activities. This is the day-to-day of how do we make sure that our financial information is right? How do we make sure that we are complying with the correct requirements? This might be, again, like doing a reconciliation of your capital assets as a control activity. Making sure that there are approvals in your system for releasing ACHs and that two people have to sign off on it. That's a control activity. So these are the important day-to-day things that help us ensure that financial information is properly accounted for and that reporting is done in a timely and accurate fashion. Information and communication, this is the result of all of the other layers that we just talked about. How do we use that information that we hopefully now have that's coming out, that's quality information? How do we make sure that people around the organization understand what the risks are that we've identified, what the control activities are that are put into place? Departments and leaders of departments won't execute your control activities unless you've clearly communicated to them what those control activities are and what the risks are. Similarly, you also have to communicate externally, either through your board to the public or through your management to your external auditor, right? That information has to make that full circle in all of those loops. Otherwise, all that good work that we just did to implement a proper control structure is all for nothing. Finally, we get to the end of sort of our reporting out cycle, and this is the point at which we should sit down, think about Are these controls that we've put into place, that we've designed, that we've communicated, are they working as we expected? Are there issues that we should remediate? And hopefully this should cycle back into our risk assessment at the sort of top of the cube here, and we get back into our life cycle of internal controls activities, where we think about, okay, now that we've identified what went well, what did not go well this year, what new risks do we have? How do we need to implement new control activities? And we start the cycle over again. This, I think, is something of a helpful chart that talks about what are the areas of internal control. Are they more high level? Are the layers more high level controls or more granular controls? And are they more entity wide or more program specific? Of course, we start with the control environment on the left here being the most high level and the most entity wide, and then moving all the way down to control activities being the most program specific and the most granular. And that moves us to poll question number 2. So we'll pause for a minute so everyone can answer polling question number 2. Perfect. Hopefully everyone properly identified that the correct answer was all of the above. Those were 3 of the 5 areas that we talked about where there are requirements for having written standards over financial management. So what are some of the other important provisions under the standards for financial management? Well, one of the areas I find myself referencing the most often are procurement standards. States can follow their own policies and procedures on procurement, but everybody else has to follow the general procurement standards or their own procurement standards if they are more restrictive than the general procurement standards in 2 CFR 200. You have to ensure that you aren't engaging in conflicts of interest, and making sure there's careful consideration of the most economical purchase option. The principle behind all of the standards we're going to talk about here is trying to make sure that organizations are using or at least considering what's the most economical purchase option. So when we talk about the general procurement standards, there are sort of 5 allowable methods of procuring something under federal awards management. We at Rehmann have historically called this sort of the bear claw of procurement. You have those micro purchases that are under $10,000, and a micro purchase need only be quote unquote reasonable. It needs to be reasonable, appropriate, and adequately documented, but you don't have to meet any specific procurement standard under $10,000, at least for federal, under the federal guidance. Your own purchasing policy might be more restrictive than this for smaller purchases. Small purchases, which 2 CFR 200 defines as under $250,000. Again, most of your organizations probably have more restrictive standards than $250,000. But if you're under $250,000, the federal requirements say you have to at least obtain price quotes. They sort of give you general guidance, and you try to obtain at least 3. And then if you are over a $250,000 purchase, you need to engage in a formal procurement process, and this should be either through a sealed bid or formal advertising, or through some type of RFP competitive proposal process. Finally, you are allowed to document that something is a sole source and do non-competitive procurement, but these should be, I would say, 2 specific things about non-competitive procurement. It should be very well documented, and it should probably be pretty rare, right? It should be something that you cannot get anywhere else except for that one vendor, and you should have a clear documented reason why it has to be that vendor. It can't be anybody else. And just as an aside, the fact that you have a long history of working with this vendor and that you like them and that they've been good to you isn't a good enough reason to say we can't get this from anybody else and to sole source that vendor. I've seen that attempted a few times. If you look out, there are quite a few states that have fairly clear guidance on how to sole source and have appendices or memos. If you're unclear about what should constitute a sole source, I would say I think the Office of the Auditor General for Washington the state of Washington has a great page about sole sourcing things and what they require for a sole source procurement. We're going to talk later about more detail about subrecipient monitoring and management. So I'm going to kind of skip over this a little bit here, but talk specifically about the requirements for recipients, subrecipients, or contractors, and in some situations, beneficiaries, and what those terms all mean and how to apply them. Federal cross principles. Now we move on to subpart E. Talk about what things in a federal award constitute allowable direct or an allowable indirect cost. Hopefully, if you have a good sound system of internal control, there shouldn't be much deviation from what you would normally purchase and what's allowable on a federal award in the general sense, not in the program specific sense, but in the general sense. If you're engaging in regular competitive procurement, the federal government doesn't think that their standards on this are significantly different than just general purchasing policy standards. Remember, there are a couple of basic rules for what constitutes an allowable cost. Again, not in a program-specific manner. I'm not talking about what specifically is allowable to purchase on the child nutrition cluster here. We're talking about, in general, for federal awards, what are the overall rules? Well, something has to be necessary and, again, reasonable. Reasonable is defined in the Federal Register if you're looking for a specific definition. It needs to conform to any limitations or exclusions, i.e. basically saying, read your grant agreement, see what's specifically set out. It has to be consistent with policies and procedures, and it has to be applied uniformly to both federally financed and other activities of the non-federal entity. Now, I think the two situations in which I see allowable costs not being appropriately handled are one, and as we emphasize here at the bottom of this slide, the cost is not appropriately documented. It was moved from one section to another, and now someone can't find the invoice. That's always going to be a problem. Or two, it was not treated consistently between federal and non-federal programs. You allocated a higher percentage to this grant than you allocated other situations, and you didn't have an underlying circumstance, a business circumstance that substantiated that higher allocation. That's going to make it look to the federal agency and to your auditors like you're trying to inflate costs on that federal grant and cover maybe your general fund costs by sort of forcing a higher percentage onto this grant. So you need to be careful that you adequately document your consistent treatment between federal and non-federal programs, and that you adequately document all of those costs. Compensation. It used to be that the rules around charging payroll and compensation to grants were more rules-based, and now they're slightly more principles-based. It used to be that they really wanted timesheets or certifications specifically for each individual that is charged to the grant. Now you have a little bit more flexibility. Charges for compensation and personnel have to be reasonable for services rendered, should follow local hiring policies, and should be determined and supported in accordance with the standards for documentation in the personnel expenses section of subpart E. Should be supported by a system of internal control, incorporated into the official records of the non-federal entity, should reasonably reflect total compensation, and comply with all of your established accounting policies and practices. Now, I think the one situation where I see most organizations run into the most trouble with this is they start the year using a budget estimate for how they're going to allocate the personnel services to a specific grant. So say you have someone that's working on a grant, and at the beginning of the year you say, I am budgeting 75% of their time to that grant. And then you go into your payroll system and you set up an allocation percentage for that person in the payroll system. And they say they're going to get charged 75% to the grant, 25% to the general fund. But you don't go back and do an after the fact review of what they actually did to substantiate that charge on the grant. You're allowed to do it. You just have to be able to support to me as your auditor later on down the road that, yes, in fact, they did spend approximately 75% of their time working on that grant. Now, this is talking about preliminary estimates that are used for actual charges if you're allocating based on an actual timesheet, or if you're allocating someone as 100% and you certify that they're 100%, just like you did under the old system, that's still allowable. This is just a reminder that you're allowed to allocate based on budget. You just have to review and make sure that it matches up with what actually happened in the real world. So moving on to the compliance supplement. Compliance supplement has 7 parts and some appendices, which I believe is labeled as Part 8. The appendices are labeled as Part 8 in the actual compliance supplement. And we're going to focus on just the general requirements of the compliance supplement in this section, talking about what things could your auditor ask you about. And then we'll talk about the changes for 2024 later on in the presentation. As stated on this slide, the compliance supplement is updated annually, and they specifically point out, they being the OMB, that they can change the rules more often than annually. And so we as auditors and you as auditees need to be regularly thinking about what laws, what regulations have changed either in our state or at the federal level, but that they as the OMB are going to at least annually update the compliance supplement and try to make sure that that compliance supplement conforms with all applicable laws and regulations. The matrix of compliance requirements is the portion of the compliance supplement that tells us as auditors what we should be focused on. You're going to see things labeled as Y for yes, applicable, and areas labeled as no, not applicable. The nice thing that the OMB does for us in every major program that's laid out in the compliance supplement is that they provide us this little diagram where they say, here's which sections we think you need to focus on for the audit. They're going to specifically call out 6 sections on each program. They're not allowed to in the general sense, give us as auditors more than 6 sections which we have to look at closely. But we as auditors have to engage in appropriate auditor judgment to say, well, just because child nutrition cluster says cash management is not applicable doesn't mean that we don't have to think about cash management. If something comes to our attention which says there's a direct and a material issue with how this organization is submitting their reimbursement requests, we may still have to look at that area, even though it's not an explicit requirement in the compliance supplement. And you as the auditee are required to make sure you're in compliance with areas A through N, whether or not it's something that they call out as we need to be looking at that closely this year, just under a standard audit program. Again, part 2 of the matrix, they will call out changes to selected requirements each year. So if you have a couple of programs that you know get audited each year, when the compliance supplement comes out, it's a good idea to go through part 2 and just say, hey, were there any changes to any of the things that I regularly get audited on? What is my auditor going to be looking at this year? Part 3 is the specific compliance requirements. Again, the last significant update until this year was in 2020, and it reminds us that we always have to consult the applicable version of uniform guidance. So now we're getting into what are the specific compliance requirements. These are sections A through N. Generally, these compliance requirements are unique to each federal program, especially when it comes to activities allowed or unallowed. Remember, we talked about what are the general standards for all federal awards management earlier, but what is specifically allowed or not allowed on that grant is unique to each federal program and is probably going to be determined by 2 things. 1, what's in your grant agreement, and 2, what does it say in the compliance supplement about that specific program and what's allowable or not allowable? So those are the two sort of sources of information that you should be referring to and looking at. And remember that this is an area that you're required to have a written policy on how you're going to conform and make sure that only allowable costs are charged to applicable grants. Allowable cost principles. Again, these have to be reasonable and necessary, properly allocable to the federal award, and adequately documented to be an allowable cost for a federal grant. Cash management generally comes in one of two forms. There's the less common form, which is advance payment. Well, I say less common. Of course, we all just went through COVID grants where a lot of those COVID grants were issued as big chunk advance payments. And also the OMB has expressed in some of its recent literature an explicit preference for making more grants advance payment as opposed to reimbursement method. They think it reduces the burden on grantees to front cash for federal programs, and so they're trying to move more programs towards advance payment as opposed to the reimbursement method. However, as it exists right now, most federal grants that we work with in the real world are still reimbursement based. Because it reduces risk for the federal agency, most federal agencies tend to prefer this method because they say, well, we can keep really careful control over what we lay out and make sure that there's a properly submitted draw request before there are any layouts of cash to the non-federal entity or the recipient. Part D is listed as reserved. No changes to that for this year. There is no compliance requirement. This used to be Davis-Bacon Act compliance. They really just moved that to special tests and provisions. So as of right now, there is no compliance requirement D until they add a new one. Requirement E is eligibility, could apply to individuals, groups, subrecipients. Basically, are the people receiving the service capacity of that federal grant, are they eligible? And this might be if you are providing CDBG funds to another organization, did they meet the requirements of eligibility? If you run a Head Start pay program for preschoolers, are the families that are in that Head Start program, are they eligible? Do they meet the requirements for receiving that federal funding? So you always need to be aware of eligibility, and this can often be an issue in audit testing. So it's important to be sure that your organization is doing a good job of monitoring who are receiving the benefits of our grant and are they eligible for the programmatic requirements of that grant. Equipment and real property management. When you are purchasing equipment or real property with federal funds, if you are purchasing equipment or real property in excess of $5,000, you need to be maintaining careful capital asset records, making sure there's inventory happening every 2 years. And if you buy a large piece of property with funds from the federal government, and you decide at some point down the road that you're going to sell that property, you need to call your federal agency and talk to them and say, can we actually keep the proceeds from this? Can we use it for a similar program, or are you going to want this back? Because technically, they are the ones that get to make that call. The threshold for this is changing with the new uniform guidance requirements, which we'll talk about later. Matching, level of effort, or earmarking. These are the 3 requirements in Part G. Matching could be if the federal government puts in $50,000, you have to put in $10,000. Level of effort, this applies to certain grants such as Title I. Basically, you need to be providing additional or new services with this grant. You can't use them to supplant existing services. We recently, of course, all had FRF money that we were allowed to supplant with. So you have to be careful about which grant are we allowed to supplant our existing services, or do we have to be providing new services, and how are we properly documenting that? In earmarking, are we allocating a specific percentage of this funding for specific purposes? Again, if you are an FRF and you decided to use more than the $10 million basic allowance for revenue loss type services, you had to properly document that. And what were you using those on, and how did you determine that that was an allowable use? making sure that you're properly tracking that percentage of federal spend on that proper category is an example of doing appropriate grant earmarking. Period of performance, this is saying you need to make sure that when you're expending federal funding, that you expend it in the grant period as specified in your grant agreement. And that if you have unpaid obligations, you need to liquidate those within 90 days after the end of the funding period. That's sort of your grace period. Sometimes you can go to the federal agency and say, hey, we're still trying, we incurred this expenditure, we're still trying to pay it out, we're still trying to liquidate it. Can you give us another extra month or two? And usually they'll say, yeah, as long as you had a valid expenditure incurred. As auditors, we have to be careful because remember that period of performance is not necessarily the fiscal year under audit, right? We could be doing your 6/30/2024 audit, but your grant period on that grant ended partway through the fiscal year. We need to be aware that all of that funding was incurred and expended before the end of the grant period, not necessarily just the end of your fiscal year. And if you're outside of that period, then we maybe have period of performance issues. Procurement, suspension, and debarment. Again, we talked about the 5 allowable methods of procurement earlier: micro purchases, small purchases, sealed bids, competitive proposals, and non-competitive proposals, also called sole source. Remember that this is also an area that uniform guidance requires you to have a written policy on. Again, if your local procurement policy at your specific organization is more restrictive than this set of rules, you're certainly allowed to use that local procurement policy. It just can't be less restrictive than this set of rules. Then you would run into issues on federal grants. Suspension and debarment. Sometimes I really wish they'd put a line right through the middle of compliance requirement I and say procurement or suspension and debarment, or procurement and suspension and debarment, because that comma seems to confuse people a lot. Remember, these are 2 completely separate things. A suspension and debarment is making sure that you're not doing business with someone who is on a federally blacklisted list, which is publicly available at sam.gov. And you kind of usually meet this requirement in one of 2 ways. One, you include in your contract up front that a certification, either as part of the appendices written into the contract or as a separate certificate that the contractor has to sign and say, oh, they are not suspended or debarred. Or 2, when you enter into that relationship with that contractor, you check sam.gov and document through a screen print out something that you checked to make sure that they weren't on the list of excluded parties. If you check when I show up as your auditor during fieldwork and say, oh yeah, we checked now, well, that's great. It does mean that they're not actually excluded and probably means that it's not a material issue, but it doesn't follow the requirement to be checking at the time that you actually contract with that organization. So you need to be doing that currently and not just when your auditors ask you about it at the end of the year. Program income is attribute J. What are you doing if your program generates funding for your organization? Well, what the federal government would like you to do is to put that back into the program primarily and add that to your funds available for being used by the federal program, so that the funding generated by that program goes to help the beneficiaries or the eligible individuals for that program. You're not just socking it into your general fund and saying, oh, great, we made some extra money. Sometimes it can be used to meet matching requirements, but again, you would want to have that confirmed either in your grant agreement or specifically with your federal agency before you decided that your program costs were going to be allowed to use as a local match on that program. K is reserved, used to be real property acquisition and relocation assistance. There is no current attribute K in the compliance requirements. Attribute L is reporting. This might be your quarterly financial report. This might be your SF 425. This might be your draw request. If you are a part of the FRF program, this might be your quarterly P&E reporting. There are three general forms of reporting under federal awards guidance. They're financial reporting, performance reporting, and special reporting. If you have a requirement to do any type of reporting under your grant agreement or in the compliance supplement for that particular program, you need to make sure that those reports are submitted correctly, on time. When your auditors come out, they'll be asking for copies of those forms and make sure that they were submitted in the right time frame and the information in them is accurate. Just last year, the federal government added back the requirement for auditors to test FFATA, which is Federal Funding Accountability and Transparency Act reporting. You were always required to do this, but if it's only been required since last year, that we have to double check you again. They took it out for a few years, now it's back in. This means you need to go out to the FSRS website if you have subrecipients and be reporting what funding you are passing through to subrecipients. Now, this is required by if you are the prime direct recipient of the first tier subaward, i.e. if you are a county receiving that money from the state, then you have to go and report that in a very specific format to FSRS. It's gonna look like this. It has specific key data elements. You have to report the name, the DUNS number. I think it now probably is requiring the UEI as opposed to the DUNS number, the amount of the subaward, the date of the report submission, et cetera, et cetera. So it has to be in this specific format. And when we as auditors ask you for your FSRS reporting, it does have to be in this specific format, or we're going to have to write up some type of non-compliance issue. Now, if you're part of FRF and you have subrecipients, don't panic. The final rule specifically said you're exempted from the FSRS reporting by doing the P&E reporting. So you have to report on all your subrecipients anyway, doing the P&E reporting. So this doesn't apply to FRF, but it does apply to all of your other federal grants. As auditors, we have to understand and test your FFATA reporting controls. And usually we're going to ask you to log in, show us that the reporting was done timely, and or give us a printout showing that the report was timely, accurate, and included all those key data elements. If we have to issue a finding on that particular issue, we're supposed to say, here are the transactions we tested, what were the things reported timely, what were not reported timely, and or are you missing key elements of that reporting data. So the FFATA reports are quite specific. If you have subrecipients on a grant, make sure you're doing your FFATA reporting because we will have to be, as auditors, looking at that this year and probably for the couple of years going forward. Subrecipient monitoring, I'm not going to spend a bunch of time on this here, but if you are passing funds through to a subrecipient, you have specific requirements that we're going to go through in some more detail in a moment, and you have to monitor those subrecipients. So if you're asking someone to run a program on your behalf, you're not taking responsibility for running that program yourself. You're passing it through to someone else and they're running that program for you. You're not home free. You have to make sure that they are following the appropriate requirements, that they're getting audited if the audit is necessary. So you're still required to identify the award, evaluate the risk, monitor, and ensure accountability. The very last section of the compliance supplement compliance requirements is section N, special tests and provisions. These are often unique to each federal program. If you look in your compliance supplement, again, another great reason why if you have several programs that are generally audited as major that you review that compliance supplement each year is because it will tell you what the special tests and provisions that your auditors actually have to look at each year. Reminder that things like Davis-Bacon requirements, wage rate requirements, those have been moved to special tests and provisions. If you were part of the school district ESSER program, they had special tests and provisions, including provision of service to private schools in your area for certain parts of the ESSER grants. So these are important things to review at least in advance of your audit and make sure you've been doing the appropriate compliance steps. Part 4 of the compliance requirement talks about agency program requirements. There are 2,200 active assistance listing numbers. I think it's actually higher now. And it also gives certain cross-cutting sections. So the Department of Education has a cross-cutting section where they specify additional items that apply to any Department of Education grant, or at least the ones that they've specified in the cross-cutting section. So it's always good to be thinking about what cross-cutting sections might exist. Clusters of programs. Remember, I mentioned earlier that when we audit major programs, we have to audit by cluster. So if you have, like, for instance, you're an institution of higher education and you have the student financial assistance cluster, that has several assistance listing numbers in it that are all audited as one cluster. So that money is all grouped together for the determination of whether that's a major program, and all of those funds will have the same listed compliance requirements in the compliance supplement that we as auditors have to test. Finally, part 6 is where the compliance supplement breaks out the components of the Green Book. We already talked about that in detail, so I won't spend any more time about it here, but it is part 6 of the compliance supplement. Part 7 provides guidance for us as your auditors on how should we audit something that isn't actually in the compliance supplement. And you say, well, I would hope that most things are addressed. Well, yes. In fact, there are literally hundreds of grants that are identified in the compliance supplement. However, if you think about, there are probably hundreds of grants in the compliance supplement, but there are 2,200 possible assistance listing numbers. All of the largest and most common programs are included in the compliance supplement, but there are less common programs that are not included. So part 7 tells us as auditors, what steps do we have to take for determining what is applicable and what do we have to test? And the answer is generally, we're going to start by assuming that everything is applicable and sort of work our way down and go, well, this probably isn't, as we understand your program in detail. And it is also going to involve a detailed reading of that grant agreement that applies to that program and what potential compliance requirements there might be. So if you have a grant that isn't in the compliance supplement, expect it's going to result in more planning meetings with your auditor as they try to ensure that they're testing the correct things. And that moves us on to polling question number 3. Amazing. Hopefully everyone feels that they've learned at least something so far. All right, so area of emphasis. I picked specifically this year subrecipient monitoring. We did this last year. I added maybe a couple of slides from what we talked about last year. I think this is a tough area for a lot of grant recipients because it is a principles-based approach, meaning, and we're going to talk about what the specific principles are, but because it's not a rules-based approach, it means that you as the auditee have to spend a little bit more time defining how it is that you're going to comply with the principles contained in subparts D and F for subrecipient monitoring and management. The first thing we have to do is determine what is a subrecipient relationship, because we are only required to do monitoring and management when it is a subrecipient relationship. And so for the purposes of federal financial management, a sub-award is when an award is made with the purpose of carrying out a portion of a federal award and creates a federal assistance relationship with a subrecipient. So when we say sub-award, we're talking about subrecipients. And a contract is for the purpose of obtaining goods and services for the non-federal entity's own use and creates a procurement relationship. So when we say subrecipient, we're talking about subrecipient monitoring. When we say contract or vendor, we're talking about procurement rules. A subrecipient is usually an organization. It is usually an entity that receives a subaward as a pass-through. and it does not include beneficiaries of those awards. Now, what is the difference? And this has made a big deal to certain organizations that received FRF funding over the last several years, and continues to remain a big deal if you still have FRF funding now. Beneficiaries used to just be individuals. When the Federal Registrar's 2 CFR 200 said beneficiary, they meant individual receiving assistance from that grant. Under FRF, they said a beneficiary could be a recipient organization that was previously harmed by the COVID pandemic or met certain other conditions. So that meant that you could pass through some federal dollars and not have a responsibility necessarily to that organization as a subrecipient to monitor and manage their use of those federal dollars. I think I have another slide, a couple down the line, where we'll talk a little bit more about beneficiary relationships as well. So if you're trying to think about, is this a subrecipient relationship and how do I have to monitor and manage that subrecipient relationship? We have to do probably about 5 things. We have to determine about the subrecipient. Are they eligible to receive that financial assistance? How are we going to measure performance in relation to whether or not they're meeting program objectives? Do they have responsibility for making programmatic decisions? Are they going to be responsible? Is this organization going to be the one that's responsible for adherence to the applicable program requirements? And is this organization the one that's actually using the federal funds to carry out that program, as opposed to providing goods or services for the benefit of the pass-through entity? Like that, i.e., second half of Part 5 is, would they be a vendor as opposed to a subrecipient? A contractor relationship is one in which the vendor is providing goods and services within normal business operations, provides similar goods or services to a lot of different purchases, normally operates in a competitive environment, provides goods or services that are ancillary to the operation of the federal program, i.e. not necessarily running that federal program, and are not subject to the compliance requirements of the federal program. So if you're sort of wondering, do I have a contract relationship or a subrecipient relationship? The way I distill this usually is, are they running a program for you? And do they meet, are they more closely meeting these first 5 criteria? Or are they more closely meeting these second 5 criteria? And that would help you determine whether or not you have a subrecipient or contractor relationship. Thinking about whether or not you have a beneficiary relationship, under FRF, you could be giving funding to another organization and in the middle of this paragraph, we talk about respond to the negative economic impacts of COVID-19. So if you have a well-documented situation in which you are designating another organization as a recipient of your federal funding to respond to those negative existing impacts of COVID, then they could be a beneficiary, not a subrecipient. They are not then subject to the provisions of Subpart F, which is to say they don't have to have a single audit for those beneficiary awarded dollars, and you don't have the responsibility to monitor them as a subrecipient. Generally speaking, if you have a contractor relationship, you also don't have a responsibility to monitor them. You just have a responsibility to monitor that procurement process and make sure that that's a competitive procurement process. So let's say we've gone through our decision tree now and we've figured out, well, we think that this organization is a subrecipient. Hopefully we determined that at the time that we entered into a grant agreement and made it very clear in that grant agreement that they were a subrecipient responsible for complying with programmatic elements, responsible for running this program, and we told them what the pass-through number that they were receiving was. Where do we look to find the subrecipient monitoring requirements? Well, we're going to look for Section D, and we're going to perform those monitoring activities in the context of our other pass-through entity requirements. So in Subpart D, it gives specific principles that we have to adhere to. How we actually carry out those principles is sort of up to us. And one of the reasons why I strongly recommend that if you are an organization that has subrecipients, that you have a specific policy on monitoring those subrecipients that you adhere to. I sort of highlight some of the things that we're going to talk about in detail here, but one of the fundamental elements of determining that you have a subaward to a subrecipient is that you explicitly identify in the grant agreement that they are a subrecipient and that you are passing through requirements. You are, as the awarding entity, supposed to evaluate the risk of noncompliance for those subrecipients, and you're supposed to consider imposing specific subaward conditions in addition to those maybe that were imposed on you as the prime recipient of those dollars. Now, how much risk assessment you do might depend on how many subawards you have, and I'll talk about that in a minute when we look at sort of an example policy. Primarily, the most important things that you have to do in terms of monitoring activities is make sure you are doing financial monitoring, make sure you are doing programmatic monitoring, and make sure that if your subrecipient organization is required to have a single audit, that you are taking timely and appropriate action if you note that they have identified deficiencies as part of their single audit, which means that you need to know if they're having single audits or not, and you need to be regularly in contact with them and find out if they're having a single audit performed. You also need to perform potentially additional during the award monitoring. Again, you have to verify that that subrecipient is audited, make sure that if there are adjustments in their records, that you make adjustments in your records, and consider taking future enforcement action. We'll talk about what that might look like in a minute. So I gave an example policy here in the slides about what a very basic subrecipient management policy might look like. And the reason why I think it's so important for organizations to have a subrecipient monitoring policy, even though it's not one of the 5 required policies. And in fact, if you work with us at Rehmann to implement a financial or a federal awards management policy, we always include a subrecipient monitoring policy in there as we work with you on establishing those systems of internal control, because you need to address how you are going to respond to those principles that are laid out in Subpart D. So one of the most important elements, I think, is you should specify in that subrecipient monitoring policy who is responsible for the monitoring. Is it the finance department? Is it the department who is overseeing that grant? Is it maybe some other department? Maybe you have a grants management department in your organization. Who is going to be responsible for carrying out that monitoring, and when will they do it? Second, you should discuss whether or not you're going to do risk assessment. Now, risk assessment is looking at all of your subrecipients and saying, who are we going to monitor? If you are an organization that has 50 subrecipients, I'm almost certain you're going to be doing risk assessment. The state of Michigan does comprehensive risk assessment about its subrecipients because it has so many, and it has different levels of subrecipient monitoring based on how risky or not risky they think your award is based on some specific criteria. You could go out online and look at what their criteria are. That's all publicly available information. But if you have a lot of subrecipients, you can reduce the burden on your department for monitoring, on your organization for monitoring, by doing risk assessment. If you have 3 subrecipients, you're probably not going to assess risk for those subrecipients. In fact, you're probably going to do, and in fact, the uniform guidance says you can do this, you're going to just say that they're all high risk. You're going to say, we're going to monitor all of them. We aren't going to bother trying to say, well, one of them is high risk and 2 of them aren't. We're just going to monitor the one. You're going to say that they're all high risk, and you're probably going to monitor all of them because it's more work to do the risk assessment than it is just to make sure that you monitor each subrecipient. Hopefully, your subrecipient monitoring policy also explains what the during the award monitoring might look like, whether that's on-site monitoring visits, whether it's performing walkthroughs of the internal controls by the subrecipient entity. And hopefully it also explains how, who or what is being monitored, and what is meant by a designation of high risk. So if we say you're high risk, we'll do these things. If we say you're low risk, we'll do these things. And so having that clear communication back and forth between you and the awarded entity is one of the benefits of having a clear subrecipient monitoring policy. Hopefully, there's also a clear discussion of reviewing subrecipient reports and responding to those deficiencies, right? One of the common areas or issues that I see is that organizations won't have even looked to see if their sub-awarded entity has had a single audit until we come out and do field work and ask them, have you actually performed monitoring activities for this situation? And they say, well, I didn't do anything because you didn't ask me about it. And I said, well, you were required to do this throughout the year, so now we probably have a potential issue. Because you need to know if they had an audit, so you know if there is a deficiency to be responded to. And if there is a deficiency in your subrecipient's single audit report, you need to take a potential action. You see in this example of a policy, I've sort of identified, as I was assisting the organization in writing this, what would happen if we identified deficiencies. Could there potentially be a return of grant funding? Could there potentially be an ending of that grant relationship? All of these are possible actions. So again, clear subrecipient monitoring policy means that the subrecipient now knows here are some of the potential compliance implications of not fully complying with all of your requirements on this grant. Remember, a written management decision is also a requirement of 2 CFR 200. And if you think about what this process should look like, it probably should look a lot like what happens when you work with your external auditor, i.e. me or someone else, on an actual audit finding or deficiency. So if you think about, hopefully, what it looks like when we work together, you and your auditor, on an actual deficiency in your audit, hopefully there's a meeting with sort of a preliminary assessment of what the issue is. Hopefully there's time to provide sufficient detail and clarity. Hopefully there's time to prepare a corrective action plan and actually take that corrective action. Before there's sort of like a punitive result from that management decision, right? There should be an iterative process of here's what the problem is, here's what we think we're going to do about it. The other good thing about providing an appropriate management decision to your subawardee with the deficiency is that you now have something to show your federal agency that was the original agency providing that grant that you made a compliance decision about that grant issue, and you can send it to them and say, hey, here's what we decided and what we did. They're going to be much more likely to agree with your plan of corrective action if you had it in writing, if it specifically addressed all of the elements of the issue and provided detail and clarity about what the problem was. If you just say, oh yeah, we just talked to them, the federal awarding agency is going to issue their own management decision to you and might take a much different stance, especially if you don't have something in writing. Again, just a couple of best practices on issuing management decisions. Clearly state whether or not the finding in the audit is sustained. You could disagree and say that you didn't think the audit finding was necessary. Reasons for the decision, expedited auditee action, including if they have to repay disallowed costs, corrective action if it's been taken, if it's not been taken, what is the timetable for follow-up. Request additional information for context and describing if an appeals process is taking place. This comes last in the list of things in subpart D, but I think should probably come first chronologically. Requesting additional information or context should probably be the first step you take and not the last one. All right, and that brings us to polling question number 4. Great. I hope that everyone identified the answer is all of the above. All of those are required elements or allowable exemptions to the rules on subrecipient monitoring. So now let's talk about things that are new this year. The first thing we'll talk about is the updates to the 2024 compliance supplement, which was issued on May 29th. I used to be able to say it was just under 2,000 pages. It's now over 2,000 pages. If you are sort of looking in the actual compliance supplement itself, Appendix 5 contains a comprehensive listing of all the changes to the 2024 compliance supplement. I'm not going to cover every single change from Appendix 5, just the ones that I think are particularly important. I'm actually going to start by reiterating about one of the changes that happened in 2023. This is not a practical change to actual grant compliance, but is changed to wording that realigned what it says in the compliance requirements supplement or the compliance supplement to actual 2 CFR 200 guidance. There was previously some language in the compliance supplement that talked about program costs having to be paid by the non-federal entity prior to the disbursement of funds. And that, I think, added some confusion. And if you're someone like me who follows forums on single audit accounting and reporting, there were certain individuals in the environment, in the infrastructure for federal accounting and reporting that really felt that this meant that you couldn't submit reimbursement requests based on grant accruals. Now, I always thought this was a bit nonsense because in practical reality, we've all been submitting expenditure requests based on grant accruals for years. And this isn't actually what it says in 2 CFR 200. There is no mention of it being paid before that you actually had to pay on those expenditures and that you couldn't have AP expenditures incurred in your drawdown request. So there's no longer this contradictory language, and I think hopefully there's no longer a confusion about whether or not it's allowable to incur expenditures but not have actually paid them and then submit a draw request based on those expenditures incurred but not paid. One of the other things that the 2023 compliance supplement included for the first time were Build America, Buy America Act, or BABA, which is, in my opinion, a terrible acronym, requirements to procurement, suspension, and debarment. There was a suggested audit procedure. I don't think that we have a lot of grants, at least at the we audit here at Rehmann, that have BABA requirements. But they did issue, in conjunction with the 2024 compliance supplement, a new Build America, Buy America FAQ document. So if you have questions or issues in relation to Build America, Buy America Act requirements, this is where I would probably point you first, is that there is a new FAQ out there, and they seem to be actually updating this FAQ fairly regularly to address ongoing questions or issues, including they've specified a lot of exemptions in the FAQ and in the guidance on the Department of Education website. So I think that this provides a lot more clarity. And so if you have issues or questions about this, this is the place to start. In part 3 of the compliance supplement update, they also issued specific information about the new uniform guidance requirements, which included effective dates for audits. I have a slide about that later on in the presentation, but unfortunately, we won't be able to implement the actual new thresholds for single audits as soon as I think some of us had hoped. Also clarified some language on allowable costs and cost principles, as well as pre-award costs in Section B. There were also updated citations for equipment and real property management. Again, we'll talk about that and the new thresholds for uniform guidance in a couple of slides here. And I updated, and they updated some citation references related to those Build America, Buy America requirements within the procurement, suspension, and debarment rules. There were also some changes to programmatic clusters. The Community Facility Loans and Grants cluster was removed. The Clean Water State Revolving Fund cluster and the Drinking Water State Revolving Fund clusters were removed, as well as the Hurricane Sandy Relief cluster was removed. Now, I think the first and last of those four clusters won't really impact many of the clients that I work with. And to be honest, the removal of the CWSRF and the DWSRF clusters probably won't have a huge impact on the organizations that have those revolving loan fund, federally funded programs with the state, because the ALNs that are commonly audited under those clusters still exist, will just be audited as their own ALNs. There were just some smaller programs that were broken out and no longer included in those clusters. So probably none of those have a huge material effect on most auditees. Also removed program 14182 from the Section 8 project-based cluster, which could have some impact on HUD grant compliance audits. And I think this last one is probably the most common one I've seen. 20.611 was removed from the highway safety cluster. So if you're especially a county that was receiving money through the federally funded highway safety cluster, that 20.611 program is no longer a part of that cluster and is audited separately. Perhaps most importantly, in the 2024 Compliance Supplement Update, they updated their list of programs currently designated as high risk. Now, if you'll remember, in past years, first starting in the 2022 Compliance Supplement, the OMB gave us a list, us being the auditors, of programs that they felt were very high risk and needed to be audited as high risk every single year, primarily because the amount of COVID funding that was included in those programs. So this is the list from the 2023 Compliance Supplement, and I've lined out the specific programs that were removed. I think the ones that impact the organizations that I work with most often are probably, if you are a school district, the Education Stabilization Fund no longer is being required to be audited as high risk every year. So this probably means if you're a school district having a single audit this year, you're going to have it's going to be much less common that you're going to have that fund audited by your external auditors as a major program. And then if you're an organization receiving FRF funding, either through 21.026 or 21.029, which are the Homeowner Assistance Fund and the Coronavirus Capital Projects Funds, those are also no longer required to be audited as high risk if they are type A this year. This is what the table looks like for 2024. I am crossing my fingers that in 2025, we won't even have a table, that they'll just exclude this completely and we'll go back to sort of normal single audit. But as it stands right now, the remaining programs in this sort of high risk table are the Medicaid cluster, 21.023 emergency rental assistance, 21.027, this is the one that is going to affect the most organizations, the Coronavirus State and Local Fiscal Recovery Fund, also referred to as FRF, and of course the Abandoned Mine Land Reclamation Project, which is a much less common Department of the Interior program. So no new programs added, a number of programs removed. FRF still remains one that we have to test as a major program for 2024 audits. The next two slides are repeats of information from the last 2 years, just basically talking about why do we have to audit those programs as a higher risk designation. The feds allow us as auditors a reasonable amount of judgment when it comes to type B programs. They tend to offer us less judgment calls when it comes to type A programs. So they've made the sort of higher risk designation pretty cut and dried for us. So if you have a program that falls into this table, 21.023, 21.027, it's probably going to be audited as major. There are not a lot of situations in which we as auditors can just document around it and say, oh, well, it's not actually a high risk program. The one situation in which that might happen is if the amount of federal COVID funding in that program or cluster isn't material. And I think the one program in which that might happen is that Medicaid cluster program. It's possible that you didn't receive a lot of actual COVID authorization funding through the Medicaid cluster. And in that situation, maybe there's a spot where we as auditors could say it is not a higher risk program and treat it as low risk. Again, they say we as auditors have to document very, very carefully. So expect that your auditors will probably just default to, in most cases, saying that a program is in that table is high risk and will be audited as a major program. Type B programs, we do not have to treat Type B programs with the same risk assessment standards. We're still allowed to prioritize the assessment of risk under our own under the existing standards, and in our own assessment, we do not have to prioritize higher risk assessment from that table when it comes to Type B programs. Just a quick note here about the transition to the General Service Administration on the submission of the SF-SAC. So in the 2023 compliance supplement, they codified in Appendix 7 the fact that there was going to be the transition in submitting to that your data collection form to the clearinghouse from the Census Bureau to the FAC. If you were working with a single audit around the time of the transition, there were a lot of issues. The GSA decided to basically rebuild the site from the ground up instead of just taking the existing website and repurposing it for the General Service Administration. Now, I don't know if that was specifically because they wanted to make sure it complied with all of the new regulations around federal websites, or if they just didn't have the same support staff. But that website has been a work in progress. I would say that the website as it stands now is much more similar to how the website existed under the Census Bureau than it was previously. But a couple of important points to remember: you have a new website, fac.gov. You can still go out there and look at historical audit information, same as you could with the old Census Clearinghouse website. You will still be required to, as the auditee, certify the data collection form as submitted. It requires most of the same steps as under the old program. And now, after a lot of growing pains and after a lot of transition, the notification and the forms submitted are much more similar to what the old program had than the new program. They are still working on the data on the website and how it works. So I'm still expecting that there will be changes in functionality and changes to how the layout looks over the next year. But for the most part, there are no additional extensions available for filing your data collection form. So expect that once you have submitted your audit, within 30 days, you still need to submit that data collection form and make sure it's certified by both you and us in order to have a timely single audit reporting package. If you have any questions about submitting that data collection form, please feel free to reach out to us. We've done it a lot. We've worked with them throughout the transition period, and we're happy to assist. Also wanted to provide an update on submitting alternative compliance examination reports. If you were an organization that was a non-entitlement unit and received less than $10 million in FRF funding and had an alternative compliance examination report completed as opposed to a full single audit, you no longer submit that through the data collection form process like you did under the Census Bureau. Instead, you're going to submit that as part of your P&E reporting through the SLFRF portal with the Department of Treasury. This means if you're eligible to do an ACE report, there will be a button at your next P&E reporting interval. This might be for a lot of recipients next April, right? So for a lot of recipients, if you were eligible for an ACE report, you probably are reporting on an annual basis. So your next report is next April. So when you submit that final closeout report, you're probably going to have to submit that ACE report as well as part of that process. We do ask that you keep us in the loop, especially if we're your auditor, because we want to know that you've completed this process appropriately. And in fact, the Department of Treasury recommends that we keep tabs on you as well. I think it's their way of trying to make sure that there's somebody else checking on your organization that was submitted, because they don't have a lot of way of knowing if you elected an ACE report or a single audit. If you just didn't submit a single audit, they're probably going to assume you completed an ACE report if you're within the eligibility requirements. So when you get to the point, whether through your quarterly reporting or more likely through your annual reporting, that you're submitting that ACE report, make sure you also save down the confirmation from the SLFRF reporting website and send it to your auditor and say, hey, yeah, we actually did this. This is complete and done. And hopefully we'll be all sealed up and finished with reporting on that federal funding. I think this brings us to polling question number 5. Now, I didn't specifically designate this. If you're someone who's been doing single audits for a number of years, you probably know that the correct answer is that your single audit is due 9 months after your fiscal year end. So that'd be March of 2025 for June 30, 2024 fiscal year end. Part of the reason I bring this up is over the last couple of years, there have been a couple of different extensions available, and there are not currently any extensions available on single audit reports. So your single audit is due 9 months after your fiscal year end to be considered a timely submission. For the most part, we as a firm try to complete those single audits if all the information is available with your financial audit, do those at the same time, get them done, finished, even though the Treasury reporting deadline is 6 months. We do them faster. So you do have that additional 3 months if you really needed it to finish your Single Audit Act compliance and still be on time. All right, so we're going to close here with our last section, which is about the proposed changes to uniform guidance. On April 4th of this year, the Office of Management and Budget put out proposed changes to issued proposed the actual changes to uniform guidance. The proposed changes were put out last fall. This included a memorandum on implementation, and in that memorandum on implementation, they sort of talked about what are the things they're trying to do when they issued the new uniform guidance rules. They meant to reduce unnecessary compliance costs. They reduced the amount of prior approvals needed to get a federal award, to receive a federal award. They wanted to remove barriers to entry, so there are sort of less notice of funding opportunity requirements, i.e. they hope that this will make it easier for non-federal organizations or recipients, as they now call them in the new uniform guidance, to obtain a federal award, especially if you don't have an established reporting department to do this. And they also provided some additional non-English language services to make it easier to comply with federal award requirements if you are part of the intended communities that they're trying to target. Implementation memorandum also talked about implementation of Title II and some implementation of pre-award efficiencies. A lot of those pre-award efficiencies were intended to, again, try to make federal awards more accessible to, there is a specific focus on tribal nations. There was also some implementation of post-award efficiencies, talking about FFATA reporting, that they're more likely now to allow for and grant requests for extension under single audits, and that grants and cooperative agreements, management systems, they also had some additional guidance on that, primarily for states. So what are the proposed changes for uniform guidance and what are those thresholds? What are the rules? How are those going to be different? And I apologize, my camera seems to be going in and out. So I'm see if I can make an adjustment and fix that here, but sorry if that's blurring out for those of you watching a little bit. The proposed change is effective for grants issued on or after October 1st, 2024. Now, what does that mean in terms of actual compliance? Well, I think it's going to mean a couple of things. One, it means that there's not a lot of clarity yet from federal awarding agencies on exactly which awards this might be retroactively applied to. The Office of Management and Budget said that awarding agencies could make these changes effective for grants retroactively as soon as June 21st, 2024, but had to make these changes effective for grants issued on or after October 1st, 2024. So if you're wondering, do these changes apply to my grants that were issued before then? Talk to your federal granting agency, because there's no overall guidance saying, well, it's applicable to everyone as of this date. You need to be specific and careful about where those changes are effective. Some of the basic changes in this new guidance are going to be increasing the single audit threshold from 750,000 to $1 million. If you've been on my webinars in the past, you'll know I've been sort of advocating for this change for a number of years. Increasing the threshold in accordance with inflation is part of how we keep the compliance requirements from becoming onerous and the number of single audits being held roughly level, so that we aren't just starting to include everyone in single audit requirements, but just those organizations who are receiving large dollar amounts. Second, it also talks about what must be reported on the CPA. So it talks about reporting for those agencies that have multiple recipients, such as departments, agencies, and other organizational units. So if you're thinking about reporting for next year, talk to us when you're thinking about preparing that CPA about what additional things you may have to disclose and designating recipients on your actual CPA. It's going to raise the de minimis indirect cost rate from 10 to 15%. I'm going to talk about that a little bit more in a minute. But that may reduce grant compliance for and may increase the amount of reimbursable indirect cost expenditures that you have as an organization, which would be a great thing. Less compliance, more money. We're always happy about that. It's also going to raise the threshold for equipment and, quote, unused supplies in terms of compliance from 5 to 10,000. If you remember back when we were talking about compliance requirements for equipment and real property management, this means if you're buying small equipment, there won't be as many compliance requirements for equipment under $10,000 or for sort of unused stockpiles of supplies underneath that threshold as well. It modifies and expands some definitions such as period performance and question costs. I don't think it's going to have a big impact on what we are doing as auditors for question costs, but it does just sort of redefine that specific term. So for some auditors that maybe we're taking a looser definition of question costs, it really hones in on what do we have to report as auditors under question costs. It modifies the definition of the modified total direct costs. That's your base for taking an indirect cost rate, right? Because to get your actual reimbursement for indirect costs, you have to have a base of direct costs and then apply that indirect cost rate to it. So it modifies that definition to exclude sub-award costs above $50,000. So that may increase your modified total direct cost base. And it removes the requirement for prior written approval on certain items. So what does this mean for actual audits? Well, the compliance supplement specified that the new uniform guidance requirements will be implemented for audits of entities with fiscal years beginning on or after October 1st, 2024. I think this was a little disappointing for those of us who hoped that the October 1st implementation date might mean for years ended on or after that date. So maybe we could have done this for December 31st, 2024 audits. In fact, the first applicable year ends that will be able to use the new thresholds and the new rules for their actual audit compliance will be September 30th, 2025 audits and later. So we've got a little bit of time, means that you have more time to think about what the compliance related to these changes and new uniform guidance rules might look like before you'll actually be audited under these rules. So we're currently staying under the existing uniform guidance, last changed in August of 2020, up until those first fiscal year ends, September 30th, 2025 or after. So We've gotten a lot of questions on indirect costs, and in fact, Rehmann released recently an article talking about changing your indirect cost rate and what might you want to do. So in the past, there have sort of been two allowable ways to do indirect costs on grants. You could either negotiate a specific indirect cost rate, or you could take the de minimis. Before the 2020 change, if you had elected de minimis or a negotiated rate, you couldn't change, period. You were stuck with that. In the 2020 change to uniform guidance, now you could change, but you can't change piecemeal. You have to either do it for everything or do it for nothing. I think the thing that's going to change with these new looser rules, or I would say more generous rules around calculating the modified total direct cost base and the increase in the rate from 10 to 15%, is going to become more beneficial for organizations to elect the de minimis cost rate as opposed to negotiating an indirect cost rate. This is great because the submission process for doing an indirect cost rate is time consuming. It often requires help of outside consultants. So being able to elect a de minimis rate on a higher modified total direct cost base will result in less compliance work and more funding, hopefully. However, I will say that one of the specific things that you have to be concerned about is that you need to communicate with your federal agency if you want to elect that de minimis cost rate. So you have to do it across the board. You can't just elect it for one specific grant or grant activity. And two, you need to say to your federal agencies that you're working with, I want to elect this rate. I want to elect it retroactively to these other grants. And make sure that they're on board and they understand and have given you authorization to do that before you just move to, oh yeah, I'm just going to start taking that 15% rate. I will say that the OMB is trying to encourage that federal agencies to allow organizations to move to that de minimis rate. They specifically noted that federal agencies cannot encourage or require subrecipients to use an indirect below the 15% de minimis, and the OMB has specifically said that they will help to mediate in indirect cost rate disputes. So you can bring them in if you think your federal agency is being unfair. If you have questions about this process, Rehmann is helping organizations to talk to their federal agencies and try to renegotiate how the indirect cost rate is working. So we're happy to field questions. Email publicsector@rehmann.com about adjusting your position on an indirect cost rate or de minimis rate. One other section that Uniform Guidance has added in 2024 is a section about requirements for cybersecurity controls. So for the first time in the actual compliance supplement and in Uniform Guidance, the OMB has put in a statement about protecting and having adequate controls over two main areas, which are financial information and PII. Now, they don't give specifics about exactly what they're going to expect, but they say, we're expecting you to have controls and safeguards in place. They don't say you need to do this, 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 and this. They say you need to evaluate your control system for yourself and make sure that that control system is functioning adequately. One of the few firms in the state of Michigan that has both public sector expertise and specializes in IT risk advisory services is Rehmann. So if you are an organization that wants to get ahead of this, we offer IT control reviews and are happy to work with your team about how can you be proactive, show that you are doing the best that your organization can to proactively implement and ensure that you have controls in place. We have a background and experience with the team led by Don Wilkerson to do some of that work in conjunction with your finance and IT departments. So something to be evaluating for the next year or so as these new uniform guidance rules go into place. And that brings us to our last polling question here, polling question 6. Hopefully everyone gets a chance to respond to this one, but that brings us to the very end of our webinar today. This last slide is our list of public sector webinar series. You can find all of these webinars on our website, including the ones that have already occurred, are recorded and available for you to watch on our website, from our governmental gap, not-for-profit updates, through our guide to driving employee engagement. And we do have one more upcoming externally available webinar presented by Ben Evey and Aaron Trask in October. So would love it if everyone registered and joined us for that webinar as well. So with that, I think I'll turn it back over to our wonderful moderator and remind everyone that if you have questions, you can absolutely email us and reach out.
Thank you, Dan. This was a lot of really great information, and I hope that everyone found this valuable today. This concludes today's program. Thank you so much for joining us. We will be reaching out directly to answer all questions submitted through the Q&A. If you'd like to learn more, please visit Rehmann's website at www.rehmann.com. You can also email us directly at publicsector@rehmann.com. That's publicsector@rehmann.com. Thank you again, and have a great rest of the day.